Hey everybody, it's Dave coming to you with the fire pit of Southern Maryland. It is Sunday afternoon. It's just about 5 o'clock. Sunday afternoon. It's 28 degrees out, so it's pretty chilly. Perfectly clear sky, like literally not a cloud in it. As we approach 5 o'clock, it's going to get dark very quickly. In fact, it's weird. It's a lot lighter on the camera than it is out here in the real world. Anyway, I just want to get started before it got pitch dark. I just lit the fire. It's just starting to come up. That's really it. I think the last thing I'm going to do before it gets dark is try to show you my cigar. Perdomo. I don't think it's going to focus in this light. Anyway, it's a Perdomo. I can't remember the blend right now, so we're just going to have to go with the Perdomo. Got a flat cut on it. Looks like a beautiful cigar. All right, there we go. The fire's starting to come up. At least there's no wind, but fire's starting to put off some heat, and it feels really good. I think we're gonna need the fire tonight. Probably gonna have to stay up close on it like this. So guys, this came from a great family event. So bear with me for a minute. So my wife Anne-Marie is one of 4 kids, 4 siblings that belonged to mom and pop. Pop died back in 2009. But we just had the collection of all 4 of her kids. 3 of them are married, so all 3 spouses. And then 7 grandchildren. And then mom, and then one of the grandchildren has a long-term girlfriend. So I think we had about 18 of us around the table. It was really quite nice. I'm pretty sure I can safely say that has never happened before. So it was just nice. It was a nice surprise mom. Everybody's there for 2 or 2.5 hours. It was really nice. Everyone got along. All the typical bickering and all that. For some reason, I married into a family where the women don't like each other from year to year. So I almost need a behavior grid to find out who doesn't like who at this particular meeting. But today there was none of that. So everyone got along. Everyone had a good time. It was just nice to be a part of it. I had no responsibility. I had to show up and eat pizza. That was my whole responsibility. And of course, I picked up half the bill. But it was nice to have no scheduling responsibility. I had no responsibility other than to get Sean and Lauren and me into the restaurant on time. Chew with my mouth closed, stuff like that. But it was really good. It was really nice. I know it pleased Anne-Marie immensely for those 2.5 hours, so that was nice to see. So anyway, kind of where I came pretty much straight from there to here, changed into my sweats and my Carhartt jacket, and came outdoors to have a fire and a cigar with you guys. Wow, it is a perfect night to be out here. Fire heated up nicely, no breeze. Wow, it's perfect out here. I love the dark. Yeah, it's such a privilege to be able to walk out my back door and 100 feet and I'm here. All right, guys, so a question that was asked to me a couple days ago, it's been asked several times over the last several months, is when do I pull profits? So the rest of this video is going to be about money. So if you're just not into investments and money and percentages and dollar signs, this would be a good time to jump off so I don't waste your time. No more tobacco. I'm not going to mix up a bunch of grab bag stories tonight. This is all going to be about my investments and how they're doing. I'm going to talk about real money and real profits and how I pull profits and when and why. But to do it for real, I got to talk real numbers and real money. I'm not going to play this bullshit cat and mouse game, because the bottom line is there is no rule, at least for me. Every type of investment I use, depending on the asset type, my purpose for owning it, and the trade style I'm using, I don't have a single percentage for taking profit. And I know that's what most people want to hear. Well, I hit 20%, I take the profit. I hit 100%, I take the profit. It just doesn't work like that in the real world, at least not as far as I've been able to find. There are probably people way smarter and worth way more money than me that run a kind of an automated percent, and it works for them. It does not work for me. So I want to talk about what does work for me. So I want to end this introduction with, I'm a financial idiot. This channel is about edutainment, education, and entertainment. This is not financial advice. If you do anything that I'm doing, you lose all your money and die penniless. Do not misconstrue my story with financial advice. So my lowest form of investing, some call it speculation, some call it gambling, is my day trading days. My goal, I put $100,000 into my day trading account. My goal is to try to pull $25,000 a month out of that day trading account. The average month has 20, 21, or 22 trading days in it. Just depends. Like August is normally 22, July is normally 21 because of the holiday. December is usually 20 because there's a couple holidays. October is usually 19 or 20 because it's got a couple holidays. So that means I have to average about $1,000 a day trading. I've told you that on this channel a bunch of times. I trade 7 futures markets in my day trading account. I don't try to understand the entire market on a daily basis. It's too hard for me. So I trade agricultural futures, mainly row crops. I'm going to list them for you. I trade corn futures, soybean futures, wheat futures, the dollar, the DX. I tried live cattle, feeder cattle, and hogs. Occasionally I trade bean meal and bean oil because the charts tell me to. In day trading, I trade on the hourly chart. I use the MACD and the RSI and several moving averages. Essentially the 10-day, the 50-day, and the 100-day moving averages. I use voodoo lines and I use pivot points. All those things are pretty much on my charts, so it's quite a bit. So the charts can look pretty busy sometimes. It takes sampling positions at the beginning of the day. If I think corn is going to go down, I buy one contract, or I sell one contract naked, meaning I'm betting against it. Sometimes I'll do that in 2 or 3 markets. So I'll have 2 or 3 sample positions open early in the day, and I watch them. And if they go against me, I just get out. And there's no percentage there. I can't say, well, if it drops 10%, I get out. It's if the market moves in the opposite way that I think it should, then I just get out. But the ones that move in the direction I think it should move, I then start adding on. Sometimes I get up to 7 or 8 contracts in a single position, because I figure I'm ramming it in to the market as the market goes the way I expect. So I have greater and greater leverage. Once one of the, let's say corn, let's just keep using corn. If corn goes down like I expect it to over the next several hours, 4 or 5 hours, and I've put 7 or 8 contracts in place, typically it'll reach one of my targets. It'll reach what usually I call a pivot point or a voodoo line on the chart. Sometimes if it reaches a moving average, then I'll get out. And I try to manage the number of contracts I have to get between $500 and $1,000 per transaction. So I only need 1 or 2 of those to have a really good day. So I stop myself out if the market moves against me. I don't have a target. And I take profits when I reach a pivot point, a moving average, or a voodoo line, and I've hit the $500,000 on the trade. I just get out. I just say thank you and take my money. And I try to do that on 2, 3, or 4 moves a day. So I'm making between $500 and say $2,500 a day. And that's kind of how I manage taking profit on my day trading account. I don't know if that answers your question, but I don't have a simpler one for you. If you need to know more about, MACD is a standard instrument that people add to the bottom of the charts, and so is RSI, the relative strength indicator. MACD is moving average convergence divergence. MACD and RSI and moving averages are easy to add to your chart. Pivot points are something that have to be calculated, and voodoo lines is an indicator I buy from a guy named David Starr. So there's your first tier answer on how I pull profits. And that's how I do it hourly, every day that the trading day is open. So any day that's not a weekend or a holiday, that's what I'm doing. That's pretty much what I'm doing in the paddock. When I say I get to the paddock, I try to get there before 9. I listen to a couple guys. They do a telecon at 9. I listen to what they have to say, and then the market's open at 9:30. Now I can trade futures almost 20 hours a day. I generally don't. I trade during the open day because volumes and predictability are much more stable during the trading day than what they call the overnight or Globex market. So there's tier 1 of the answer. So tier 2 are assets that I purchase with the intent of holding them for some period of time. 6 months, a year, 5 years, 10 years, never to be sold. I generally try to understand what my thoughts are before I enter the purchase for the asset. What I mean is when I purchase gold, or purchase silver, or purchase crypto. Those are the 3 assets that I tend to play in. Gold is a simple thing. I purchase physical gold and have it delivered to vaults. I purchase physical silver and have it delivered to vaults. I take possession of the physical product. And then crypto, you've heard me talk about for the last couple of weeks. It's an asset I purchase for as long as I think the market is going to be headed the way I want it to. Most of the time, they're not long-term holds. I'm not buying these assets to hold 10 or 20 years. At least I don't think so at this point. So my gold holdings brought me about $3 million in profit this year. Now, a little bit like a casino, you can let it ride. You can let it all ride on gold. It's kind of like saying to let it all ride on black or red at the roulette table, though. So what I do is I pull profits from the asset that has done really well and move it to another asset class. And you've heard me talk about I'm moving my gold profits to my crypto profits, or my crypto purchases. So I'm using the profits of one asset to purchase another asset class. Spread out the risk. Now I've got some on red and on some on black. I'm currently pulling $1 million of my gold profit and I'm moving it to the crypto market little by little, right? I got to watch it. I got to do it slowly. I've got to do it carefully. I've got to do it intelligently. But that's what I've been talking about for the last few weeks. I'm moving $1 million in gold profits to the crypto world. You know, why am I not pulling all of my profits? I just don't feel comfortable with that right now. You know, if the crypto market does well, maybe I will in fact move more of my gold profits and my silver profits to the crypto world. But I won't know that for another probably 30, 60, 90 days. I have the expectation of making somewhere between 5 and 10 times my money in the crypto market this year of 2025. So you can do the math. That means I'll have somewhere between 4 and 9 million in profit. So I'll have to move that as well, or I'll let it ride, but I doubt I'll let all that ride on one asset class. So I have to pull profits and move it. And so again, it's not a formula. It's this asset is done well enough and has so much profit in the number, I feel uncomfortable letting it ride. And so I'm moving it over. And it can be the percentage, like it's 50% in gold, or it could be a number, 3 million. So I have to move some of it. And right now I feel comfortable moving 1 million, not 3. So again, that's not very mechanical, is it? It's not very methodical. It's not very formula oriented. But I've decided to pull 1 million, which is 1/3 of my profits, and move it to another asset class. So I'm moving money now into 5 cryptos. I don't even want to talk about which ones I've done that in the past, so you can go back and watch prior videos if you want to know where. I just don't want to make you guys do, like, follow me, because I could be dead wrong. I don't think I'll lose money. I might not make 5 or 10 times my money. Maybe I'll only make 2 or 3. I have no idea. I have a belief. I know why I believe it. I know why I'm moving my money where I'm moving it. I believe we're moving into what's called altcoin season. That's why I'm not buying a lot of Bitcoin or Ethereum. So I think it's altcoin season, which is those alternative coins. And there's 10,000, 20,000 of them. I don't even know anymore. So there's a second class discussion. I know you guys want to hear a percentage. It doesn't exist. I pull profits when the profits from one you make me uncomfortable as a percentage or mainly as a dollar amount. And that's what I'm doing. So the third and last class are my long-term hold assets, which are basically what I consider real estate. We have our home here, which is paid for. We have our 60-acre horse farm about 15 minutes from here. It's paid for. They've got the Cayman property, a waterfront property down south in my county. They have the Wyoming house. So when will I pull profits on those? I don't really know yet. Here, it's an emotional discussion. It's emotional. It's not about money. It's when do we get to the point where we're not using this asset enough and it's time to sell it. And I just don't know if we'll ever get there or when we will. That's a conversation for when that occurs. That's event driven. You know, that's life driven. And when both my kids are out and launched, John's in Denver and never coming back, and I don't know what Lauren's going to do. She graduates this May, and she's got some life things to figure out. Where's her job? Is she getting married? And all those factor into this house. The horse farm will get sold when we're done using it. And we probably have close to $1 million into it in capital. We might double our money if we sold it. So when we're done using it, we will sell it. So again, that pulling that profit has nothing to do with a percentage or a formula or a figure. It's when we're done using it. Same here, right? So the two assets I've talked about really are use-based, emotion-based, which you really shouldn't use for most of your investing, by the way. The Cayman House, we'll see. I'm in no rush. It's rented out. It's actually net cash positive, so I own it, pay no taxes on it, and it pays me $6,000 a month. So, except for repairs, and it is in a hurricane zone down there, so I do have repairs, but it's not costing me much to own it. It's a great way to hide several $1,000,000 offshore, so that's why we're doing it. I don't see that story ending anytime soon. If it were to go crazy, if something happens in the world and Cayman blows up and it becomes worth 3, 4, 5 times what I paid for it, then I'll probably entertain, proposals. We'll see. So there's another one. That's really, I have no set amount. I can't say, hey, we paid $3 million for it, and if I can double my money, we'll sell it. And we're not doing that right now. My waterfront unit's not worth all that much money. It's a 2-bedroom condo, 2-bedroom, 2-bath condo. It's probably worth $400,000 or $500,000. We've owned it for 20 years. It's fully paid for. I have full-time renters in there. We rarely gap between renters. It's net flow cash positive for me as well. Really, the only expense is a little bit of upkeep and the monthly management fees and the property taxes, and my rent covers all that, so it's really free to me to own. So I don't see any reason to let it do anything but accumulate right now. So that brings up the last asset, which is the Wyoming house, which is semi-emotional. I love it there. You see me spend half my year there. My kids love it there. So what am I going to do with that? So my intention was, when I bought it, was to keep it forever and will it. Same with my Cayman house. I was going to will those 2 properties to my kids. And how you do that in the United States is important. You got to do it smartly, or they won't be able to afford the death taxes on it, or the estate taxes, or whatever you want to call it. But the Wyoming house has thrown me a curve that speaks to my unemotional side. So we're going to talk real numbers again. So I paid $8.5 million for that house 3 years ago. It's currently formally assessed at $17 million, and we've had offers at 20. Pretty insane, isn't it? Pure luck. Just jumped into that market at precisely the right time before the market blew up. The market's always strong in Jackson, don't get me wrong, but we just jumped in right in front of a tidal wave that, frankly, I didn't know was coming. So what I've told the real estate agents is, when you have a $30 million offer, that's when we'll talk. Why 30? I don't know. It's probably an emotional number. But if I can pull $22 million of profit off of a single asset and pull $30 million cash out of it, at some point, my lawyers even said, at some point on assets, you receive such a crazy offer, it's irresponsible to the legacy of your family's wealth, to that intergenerational wealth, to not take it. So right now, I think that number's 30, but if it ever gets there, and it probably will in the next few years, I have a big decision to make. And do I make it emotionally, or do I make it purely on cash? So that's where we are. Guys, that's really it. I know the people who ask these kind of questions want actual percentages and formulas, and I just don't have them. I don't run things that way. So I hope I've answered. I mean, I've opened my kimono. I've given you the realest answers I know how. I hope they help. I hope they land. I hope they don't make you think differently of me. I say none of this to brag, or I don't know. There's a lot of negative ways to interpret this video, and I would ask that you try not to take any of them. I just want to answer questions in the most real way possible, in the most real life way. I think too many people sell training courses and sell books and seminars on bullshit. In fact, some people I think who get rich in the investing world get more rich by selling books and seminars than they do on actual investments. And I have no interest in doing that or playing that game with you guys. So I talk real assets, real dollars, and real day-to-day, week-to-week, and month-to-month decision points for me. And what's weird is you see me in the middle of a huge transition for me to take $1 million and move it from one asset class that's performing unbelievably well and move it to I believe in asset class is really a big deal for me. You know, I haven't done this in, you know, four years ago, I started doing it to get ready to purchase the house because that purchase took a year. But I haven't done anything like this in 4 years. And prior to that, it had been 2 or 3 years. So, you know, I sold my company in 2019 and we took a year to decide what to do with the money. So that was a huge year. 2019 was a huge year of asset investments. And then 21, when I bought the house, was a big one. And then now is a big one. So I don't do this very often. I do it all the time. I do it every day in my day trading account. But these larger asset switches I don't do very often. So I guess another investment topic we should go through is whether you should invest when you're under debt. My opinion is no. You know, unless you're working for an agency that gives you matching, you should maximize obviously your 401k and maximize what you can put into it. Make sure you get the entire matching fund. That's just free money. And you should be careful and manage a lot of your pension funds, pension, that's a bad word in today's world. Most of your 401ks can be self-directed, or maybe you have self-directed IRAs. You need to pay attention to that. You need to make sure your money's working for you. But if you're under crushing debt, if you got 2 car payments and a house payment, and a bunch of credit card debt, and you say, well, I'm going to invest my way out of it, I consider that a mistake. I think it's a far better use of your capital to pay off debt than to invest. And the reason I say that is you're probably not going to beat the debt percentage you're paying. Your mortgage, your car payment, certainly your credit cards are probably pretty high interest rate. And some people will tell you to try to arbitrage a 5% mortgage against making 15 or 20% in the market, and you make the difference. And I'm telling you, that is hard to do. When you're under crushing debt, it is hard to make good, unemotional investment decisions. And I've known a number of people. In fact, I don't really know anybody who tried it and made it work and changed their life. Just about everybody I know who's tried to invest their way out of debt has made it worse by making bad panic decisions and end up buying high and selling low and blowing up their accounts. And now they have all the debt and they've blown up their investment accounts. So, you know, those are my thoughts on debt versus investing. The reason I talk about debt versus investing is if you're in if you have a lot of debt, most of the time you don't have much free cash to put in. And so you may make 100% on your money, but if your money means $50 or $100, you can't just look at the percentage. You have to look at the dollars too. So if you only have $50 to invest because of so much debt, and you invest that $50 and you double your money, you made $50, and that's not really enough to affect anybody's life. So to get money to put into investments, you got to clear up your debt, and then instead of getting new debt, you use the debt payments that you use to make, and you put that into your investment accounts. I don't know if any of this made sense, and I feel a little odd going through all this, but I wanted to have a real talk with you guys about profits and how I run my investments and how I decide to pull profits and how much and what do you do with it. That's the big problem. And problem, I know you tell me to go after myself, but let's say the Wyoming house hits $30 million in 2 years, and somebody comes by and says, you know what, I'm gonna, they say in Jackson the billionaires are pushing out the millionaires, because to me $30 million is a shit ton of money. To a billionaire, that's a day's pay. So, when the right guy finds this house, he's gonna say, I couldn't care less, give the guy 30 million. It's a rounding error. So it's a real possibility. In fact, the real estate agents tell me it's an ultimate, it's going to happen. The problem is, what do you do with it? Now you're sitting on $30 million cash, 22 million of it taxable profit. What kind of asset do you roll that kind of money into? So you just have to have a plan. When you pull profits, it's as important to know what you're going to do with it and why as it is to decide when to pull. And frankly, I don't know what I would do with a $30 million windfall from the house. So I'd not only be dealing with the emotion of selling a place I love and that I told my kids I'd will to them, So what would I do? My plan right now to be divide it basically in half and put it in trust for Lauren and Sean, and they'd have a $15 million cash account that, of course, we'd invest. So that's my final goal in life, by the way. I've talked about on prior videos. You're looking at a guy who ran off the rails. My life dreams from when I was old enough to have them through 5 years ago, I've run off the rails. I've attained all my dreams. And the last one that was on my list was to make sure my kids are set up for life, to create true intergenerational wealth and teach them how to use it and be responsible with it, so they can do the same for their kids and their kids and their kids. And maybe I can start something that's truly intergenerational, and not do the typical 3 generations, rags to riches to rags story. So all that is on my mind. That's my overarching umbrella thought against all my investment decisions, is can I continue to provide my family with the quality of life they're used to, and set my kids up so that they can do whatever they want and do it maturely and responsibly, and set their kids up for the rest of their lives. So guys, I'm fully aware of money ruins kids. I hear that all the time. And they've seen us be kind of a regular family in their early days, to a family that has means, to a family that is pretty well off. They've walked that path with me. So they've seen it. They know what it takes. And we'll do it in such a fashion we won't ruin them as people. I guess the other thing is, I try to bring God into it every day. I start my investment day with a prayer to Him that may He speak to me and guide me, and may I be smart enough and quiet enough and calm enough to listen to what He's telling me. It doesn't always work, but I try to start every day like that. So hopefully He's guiding me as well as my thoughts and emotions. And the other thing we do is we try to change people's lives with the wealth we do have. Sometimes I change my kids' life. Sometimes I change the family around us, my extended family. We try to change their lives. The people who work for us in our different companies, we try to change their lives. So it's not all kept just in the investment. It's not all just kept for my kids and my family. It's not. In fact, I'm done with racing in cars, so I try not to spend money like that anymore either. In fact, I'll tell you, I advise you to be debt free, and this family is. In fact, I just made my daughter's last tuition payment. My son's been out for 2 years. My daughter, I just made her last payment. Those are the big expenses in my life. Now it's just property tax. The property tax in the Wyoming house is monstrous. My rent for the paddock is, about the equivalent of a mortgage. And the insurance packages I have to run to keep all these assets protected is fairly expensive. But other than that, I really don't have bills. You're talking about cigars, pipes, tobacco, firewood, maintenance on the houses, stuff like that, but I have no debt. I have no real expenses except for the property taxes. So I can make clear-headed, unemotional decisions and take risks like enter the crypto market and altcoin season with a clear head and with very little emotion. That's why I advise you to get out of debt before you try any of this. All right, guys, we're at 35 minutes. You've wasted another perfectly good half hour listening to my crap. I hope I answered your questions. If I didn't, if you feel like I stepped them aside or missed it completely, keep me honest. Tell me, ask me the questions again. If I really just created more questions with my answers, just go ahead and ask the questions. Guide me through this conversation. Like I said, I feel a little odd laying it all out there, but I don't know how to have real conversation and give you real discussion and give you real answers without giving you real information. The last thing I want to do is come across as a shyster trying to give you thoughts that I don't follow myself. So hopefully it's the opposite. But that's it. God, I hope you guys had a great weekend. Boy, I sure had a good day today. The family event was awesome. I had a great couple hours in the paddock. I'm so ready for this week coming up, both for the markets and for the Christmas. So I hope you're having a great Christmas season. I'll say Merry Christmas to you. And let's go ahead and close this out. We'll ask that God bless your life and the lives of all those around you. I ask that He turn His ear to your prayer, that He may hear you. I ask that He make His face shine upon you. And I hope He blesses your life as well as He's blessed mine and continues to do so. So that's it, you guys. We'll probably talk again tomorrow on Monday. And say goodnight, everybody.